Welcome to the Deep Dive. This September, wow, the crypto market feels like a bit of a storm, doesn't it? Influenced by, well, everything from global economics to these rapid network upgrades happening inside crypto itself.
Yeah, it's definitely complex right now.
So you've asked us to really dissect how Bitcoin, Ethereum, and Solana, the big three, you could say, are charting their course through all this. We want to pull out those crucial nuggets you need to, truly understand the month ahead, not just kind of watch the prices flicker. Our mission here is to cut through the noise, really distill the key insights from all the technical analysis, the macro factors, the on-chain data you've shared. We're aiming to give you that integrated, well-informed perspective you need to navigate these markets.
And what's fascinating here is exactly that interplay you mentioned, how deeply interconnected these digital assets are with global economics, and yet their individual stories are still quite unique. The current market is, well, it's a complex tapestry of signals. And for September, a disciplined, multifaceted view looking at both the tiny details on the chains and the big macro wins. That's absolutely crucial for your understanding. It's about connecting the dots, really, not just collecting them.
Okay, let's unpack this then. Let's start with Bitcoin. Digital gold, as many call it. August wasn't exactly its best month, was it? Dropped about 6.5%.
Yeah.
And it kicked off September around $108,000. Plus, there's this historical thing people talk about, the September curse. Apparently, 8 of the last 11 Septembers saw a decline, averaging almost 4%. So with that kind of backdrop, what's the actual technical picture look like right now? What hurdles is it facing immediately?
Okay, so technically that August dip, it was pretty significant. Bitcoin decisively breached the $110,000 support level. That was a price point that had held firm since May,
Yeah, I remember that holding.
Exactly. So now we're seeing that same level, 110K, maybe up to $114,000, acting as preliminary resistance. Below us, the critical support to watch is $103,000. And if that doesn't hold, well, then a retest of the big psychological $100,000 mark becomes very possible.
Right, the big round number.
But digging a little deeper into the on-chain data reveals something pretty compelling. Here's where it gets really interesting.
Okay.
Despite this short-term technical weakness, the number of wallets holding a lot of Bitcoin has actually hit a new all-time high, 19,130 of them.
Wow. So big players are buying.
It suggests they're quietly accumulating, yeah. Even while some trend indicators look oversold, it hints that maybe further downside might be limited. So the key insight here is this clash of signals, right? We've got institutional caution, like those ETF outflows we saw, versus this quiet, confident accumulation by on-chain whales.
Yeah.
And for you, the learner, this really highlights Bitcoin's dual nature. It's a risk asset, sensitive to macro stuff, but it's also increasingly seen as a long-term value play, especially in uncertain times. So dips, well, they might be battlegrounds where that long-term conviction gets tested, and smart money builds positions.
That whale accumulation is a fascinating counter signal, though, because sometimes these big players accumulate just to dump it later, right? How do we know if this is genuine long-term belief versus just like tactical positioning?
That's a really crucial question. And yeah, that's where the nuance comes in. We typically look for sustained accumulation over time, not just one or two huge buys.
Okay.
And we also look at wallet behavior. Are they moving Bitcoin to exchanges? That often means they're getting ready to sell. Or are they moving it to cold storage, which suggests a longer hold?
Right.
In this case, the pattern seems more like holding, not immediate distribution. So that points more towards a fundamental belief in Bitcoin, despite the short-term turbulence.
Okay, that makes sense. So we've got the technicals, the on-chain picture. But often the real catalysts, the things that really move the needle, they come from outside the charts. What are you seeing on the macro front? Or policy-wise? Anything that could fundamentally shift Bitcoin's path this September?
Absolutely. The immediate focus and what's driving a lot of market chatter right now is tonight's U.S. non-farm payroll data.
The jobs report. Always a big one.
Always. The market is incredibly sensitive because, well, strong economic data could make the Fed stay hawkish, right? Put pressure on risk assets like Bitcoin. But weak data, that could boost hopes for rate cuts, make the Fed look more dovish. And that's generally seen as positive for risk assets because it means more liquidity potentially coming into the system.
Right, cheaper money.
Exactly. After that, we'll be watching U.S. inflation data, CPI, retail sales figures, all leading up to the big one, the September 16th, 17th Fed meeting.
Okay.
Now, a crucial detail here. CME futures, they're currently implying a 90% probability of a 25 basis point rate cut at that meeting.
90%, that's high.
It's very high. And if that cut gets confirmed, it would inject significant liquidity. It could act as a powerful tailwind for Bitcoin, maybe even turn that September curse into a September surge.
But what about that 10% chance? I mean, 90% is high, but not 100%.
Yeah.
What's the risk if the Fed doesn't cut?
Yeah, that's the key risk. If the Fed surprisingly holds off, or worse, sounds even more hawkish, that would likely be a significant headwind because the market has largely priced in that cut. So any deviation could trigger a sharp risk-off move. We could see Bitcoin pushed lower as investors pull back from anything speculative. That's why this meeting is such a focal point.
Makes sense.
Beyond the Fed, we are also seeing, like you mentioned, those ETF flows, about $751 million net outflows from Bitcoin ETFs in August. That signals some institutional caution, at least through those channels.
Right.
But on the flip side, there's still that background anticipation for the first U.S. spot Bitcoin ETF approval. That remains a potential black swan positive event, could happen anytime, theoretically.
Sure.
And on-chain, beyond the whales, we saw Tether issue $2 billion USDT on Ethereum just in early September. Plus, big exchanges like Binance and OKX have seen huge stablecoin inflows, like $2 billion to Binance, $800 million to OKX over the last 30 days.
So that's buying power waiting. Ammo.
Exactly. A lot of ammo sitting on the sidelines, potentially ready for buying opportunities. So if we connect this all together, Bitcoin really is acting as both a risk asset, very sensitive to macro shocks, and also potentially a safe haven, attracting funds if the economy weakens and the Fed eases policy. It's complicated.
Definitely a push and pull. So for you, the learner, trying to figure out the playbook for September with all these conflicting signals and big events, where might the opportunities be? And maybe more importantly, how do you protect yourself?
Okay, good question. For potential buying, given the current setup, I'd probably focus on the $100,000 to $105,000 region for accumulation.
Buying the dip, basically.
Yeah, especially on dips that might happen around those volatile data releases like NFP tonight or the CPI data. For short-term profit targets, maybe look at $110,000 to $114,000. That was the old support, now likely resistance, so it's a natural place to maybe take some profit. If momentum really picks up, then we could see a push towards $120,000 to $125,000.
Right.
But risk control is key. If you're opening positions near 100K, setting a stop loss maybe around $98,000 would be prudent, just to limit potential downside.
Right.
The main thing here is light, flexible positioning and critically avoiding high leverage, especially around these big news events like the Fed meeting. Things can get wild.
The leverage can wipe you out fast.
Absolutely. So watch tonight's non-farm data and that Fed meeting very, very closely. They are almost guaranteed to drive significant volatility across all markets, not just crypto.
Okay, that's a clear map for Bitcoin. So Bitcoin, this sort of seasoned veteran grappling with cautious institutions but strong whale buying, all under the shadow of macro events. How does that compare to Ethereum?
The ecosystem king often amplifies market moves, right? It got close to $5,000 recently, but couldn't quite stick the landing. Pulled back to around $4,400. What's the technical read there? Yeah, that failure to breach $5,000, that psychological level, it was pretty significant, actually. It led to about $338 million in ETH long contracts being liquidated.
Oof, a big shakeout.
Swift shakeout, yeah. Wiped out a lot of over-leveraged longs. On the technical side, we saw what's called a top divergence on the daily RSI, the Relative Strength Index.
Meaning price went higher, but momentum didn't follow.
Exactly. Price made new highs, but the RSI didn't confirm it. That can be a bearish signal. It also broke below a trend line around $4,300. And some analysts are even seeing a potential head and shoulders pattern forming.
Oh, that doesn't sound good.
Well, it's a pattern to watch. If the critical $4,000 support level breaks, that pattern would suggest a target down around $3,350.
Wow.
But let's not get ahead of ourselves. There's strong support first at $4,200, and the critical 20-week moving average is at $4,434, which is holding for now and is important for that medium-term sentiment. Resistance. First hurdle is $4,600, then back to that big $5,000 mark.
Okay. But beyond just the macro picture that affects everything, Ethereum has its own stuff going on, right? Its own fundamental drivers. What's happening in the ETH ecosystem that you, the learner, should really be aware of? And how does that interact with the broader market?
That's right, and it's a really crucial distinction. While ETH does tend to amplify macro shifts, it has a higher beta, meaning it's often more exuberant than Bitcoin, both up and down.
Yeah, it swings more.
It does. But its own fundamentals are incredibly compelling right now, and they really differentiate it. A massive game changer was the EIP 4844 upgrade earlier this year, proto-dank sharding.
Yes, the fee reduction.
Exactly. It dramatically reduced layer 1 gas fees by 90%. And this isn't just some minor technical tweak, it's revitalized the network. We're seeing increased on-chain activity, a rebound in total value locked, TVL, back up to about $16.28 billion. Cheaper fees just mean more people can actually use the network.
Yeah, that's huge for users and dApps.
It really is. And you combine that with Ethereum's EIP 1559, which burns a portion of transaction fees, plus staking. We're seeing a genuinely deflationary environment, or at least very controlled supply growth.
So supply is shrinking or barely growing?
Pretty much. And what's fascinating here is the NVT ratio, network value to transaction ratio. Think of it like a PE ratio for a blockchain.
Okay.
It's near historical lows for Ethereum right now. That's often seen as bullish because it suggests the market maybe isn't fully valuing the actual utility and activity happening on the network. It implies ETH might be undervalued relative to its on-chain action.
Interesting.
And one more thing. After that recent pullback from near $5K, a staggering 98.4% of the ETH supply that was in profit flipped into an unrealized loss between August 26th and September 1st.
So almost everyone who bought recently is now underwater.
Basically, yeah. Which means most of the short-term profit takers, the weak hands, have likely been flushed out.
Yeah.
That potentially leaves a stronger base of holders who believe in the longer term.
So the weak hands are out. Fundamentals look better. What about institutions? Is the smart money still interested despite volatility?
Absolutely. On the institutional front, we saw a really significant inflow, 286,000 ETH flowed into institutional ETFs in just 1 week recently.
Wow, that's a lot.
It is. It reflects growing confidence, I think, in Ethereum's whole narrative of the deflationary asset plus staking yield. That 3.5% APY from staking is very attractive to institutions.
Right, yield is hard to find elsewhere.
Exactly. Now, there's about 986,000 ETH waiting in the queue to exit staking, but that seems to be largely offset by the strong institutional demand. And whales are also accumulating ETH on dips similar to Bitcoin. The key insight here is Ethereum's unique value prop. It's not just tech, it's a yield-bearing, potentially deflationary asset that's increasingly appealing to bigger long-term players.
Okay, so putting it all together, what does this mean for your strategy if you're looking at Ethereum this month, considering its macro sensitivity, but also these strong internal dynamics?
All right, strategy-wise. For potential buying, I'd probably look at the $4,300 to $4,500 range as a reasonable entry zone. There seems to be particularly strong support down at $4,200.
Wow.
But it's really crucial to understand that $4,000 is critical psychological support. If that level breaks and price stays below it, you probably want to stop adding more and just reassess the situation.
Got it. 4-day K is the line in the sand.
Pretty much. For profit targets, your first stop should be $4,800 to $5,000. Be ready to take some partial profits there as it's clear resistance. If we get a broader market recovery, maybe later in Q4, yeah, we could see an extension for $5,500, maybe even $6,000 plus there, but take it level by level.
And risk management, especially with ETH being more volatile.
Vital. Remember, historically, September sees a median drop of 12.5% for Ethereum. It swings harder. So a core stop loss around $3,950 to $3,980, just below that $4,000 mark, could limit losses to around 10% if you got in your $4,300, $4,400.
Sensible.
And I'd strongly advocate for low leverage or just sticking to spot positions. And be strict with your position sizing, maybe 10-20% of your total capital per trade, given the volatility.
Good advice.
Also, keep monitoring the overall market correlation. Bitcoin often leads, ETH amplifies, as we said. Watch ETH-specific things too. Gas fees, are they high? That means high demand and more burning. Network stability, obviously. And keep an eye on those institutional flows and what the options market is saying. Right now, it shows short-term caution, but still longer-term optimism for $5,000 and beyond.
Okay, Ethereum definitely presents a compelling, but volatile picture. Now let's switch gears to Solana. SOL has surprised a lot of people with its resilience lately, hasn't it?
It really has.
While Bitcoin's grappling with macro and ETH is consolidating, Solana's price action has been quite robust, holding around $210, maintaining a clear upward channel. What's making it tick? Is this strength sustainable?
Solana has shown this remarkably stable upward channel really since Q2. Both the highs and lows are consistently rising. That $200 mark is proving to be really crucial. both psychologically and technically. We've seen strong buying interest bounce off it multiple times.
Yeah, $200 seems key.
It does. Secondary support is a bit lower, around $185. On the upside, the significant resistance to watch is $230 to $238.
Okay.
Now, digging into Solana's indicators, here's where it gets really interesting again. The on-balance volume, the OBV, which basically measures buying and selling pressure.
Right.
It's been steadily rising for Solana, shows continuous capital flowing in. We're also seeing these frequent short squeezes. When SOL dips just below $205, boom, it gets bought up really quickly. That just reinforces $200 as a strong floor.
So buyers are stepping in aggressively on dips.
Seems like it. And if we connect this to the bigger picture, some observers are calling Solana's current consolidation above $200 a fractal, like a repeating pattern of its performance back in autumn 2023.
Oh, yeah, when it bottomed around $20 before that massive rally.
Exactly. So the idea or the suggestion is that there's potential for another strong breakout, maybe towards $280, $300 after this current accumulation phase finishes.
That fractal idea is definitely intriguing, suggests a huge potential upside. But, critics might say past performance isn't indicative of future results, and Solana still faces a ton of competition. What's different now compared to 2023 that makes you think this isn't just wishful thinking?
That's a totally fair challenge. And yeah, past performance isn't a guarantee, but the key distinction lies in, I think, fundamental improvements and crucially institutional validation that wasn't there in the same way back then.
Okay, like what?
Well, back in 2023, Solana was still kind of recovering from the FTX fallout, still battling network stability perceptions, remember?
There are outages.
Exactly. Now, network performance is significantly improved. No severe outages this year. That's a huge confidence booster. More importantly, there's the upcoming Firedancer client from Jump Crypto. That promises even better performance, more decentralization, better security.
Right.
It directly addresses those past criticisms.
Right, Firedancer is a big deal for them.
Huge. And we're seeing genuine ecosystem growth, too, in DeFi, NFTs, gaming. But the really crucial part is the institutional nod. The first U.S. Solana staking ETF, symbol SSK, launched recently. It attracted $15.8 million in a single day.
Wow.
Pushing its total assets under management to a record $219 million. That signifies smart money actively entering Solana now, providing a sort of invisible floor as these institutions have to acquire SOL to stake it.
So they become structural buyers.
Precisely. Plus, early investors and whales are also consistently accumulating. Now, Solana still has that high beta nature. It definitely amplifies broader market moves up or down. But this raises an important question for its future. What if we see news like Visa expanding its stablecoin settlement on Solana? They've already piloted USDC there.
Yeah, that would be massive validation.
Huge validation for its commercial use case. That could significantly boost the price. So the key insight here is that Solana's current strength seems backed by both the technical accumulation and maturing fundamentals, plus this growing institutional interest. It feels different from just a purely speculative run.
Okay, that makes a strong case. So for you, the learner, how do you approach trading Solana this month? Balancing that potential gain with protecting your capital, especially given that high beta nature.
All right, for trading Solana, potential buying, I'd look at the $185 to $200 range as a good zone for staggered buying. Maybe use a pyramid approach on dips.
Meaning buy more as it gets closer to support.
Yeah, smaller amounts, higher up, progressively larger amounts as it drops towards that $185, $200 support zone. Your first profit target should definitely be that 230 to 238 resistance zone.
Okay.
If it breaks through that with strong volume and conviction, then yeah, targets of $250, potentially $275, $280, which is near the top of that upward channel, or even $300 become plausible.
And the stop loss.
Given the volatility, you need one. Probably place it around $180, just below that $185 support level. If you entered near $200, that limits your loss to about 10%. And again, because SOL can swing 5-10% in a day easily, low leverage is absolutely critical. Or just stick to spot.
Got it. Low leverage on SOL. Anything else specific to watch?
Definitely monitor overall market sentiment, watch BTC and ETH direction. SOL tends to follow, but with more energy. Keep a close eye on Solana-specific news, any network issues, obviously, but also big project launches or partnerships.
Right.
And maybe keep half an eye on whale movements, especially any potential large sales from those bankruptcy estates like FTX or Alameda that could create temporary supply pressure. Things like funding rates and lending rates can also give you clues about short-term sentiment. But the overall insight, Solana offers compelling growth potential, but that high volatility demands really precise risk management.
Wow. What a truly insightful exploration into September's crypto landscape for Bitcoin, Ethereum, and Solana. It's crystal clear this month is shaping up to be one of, well, both significant opportunity and considerable volatility. Driven by this fascinating interplay of macroeconomics, the on-chain dynamics, and each project's unique developments. This really hammers home the value of understanding these underlying factors, doesn't it? Going far beyond just watching price charts and seeing how each asset fits uniquely within the bigger market picture.
And this really raises an important question for every learner listening. In a month that's packed with such diverse influences, from huge Fed decisions to subtle ETF flows and core protocol upgrades, how will the market actually prioritize these different signals? And what unexpected connections or maybe divergences might emerge between these three assets as they navigate the currents of September?
Yeah, that's the million-dollar question, isn't it?
It is. Ultimately, disciplined execution of whatever strategy you choose and just continuous informed learning, those are going to be your best allies in making sense of it all.
Couldn't agree more. Well, that's all for this deep dive. We really hope this has given you a clearer, maybe more nuanced map for the month ahead. Stay curious, stay informed, and we'll see you on the next deep dive.